Hey everyone, thanks for joining us. I'm Rob Simone. I'm the REIT sector head here at Hedgeye, broadcasting from the Rhode Island remote office, and very excited to be joined by a special guest today. Many of you may know her, Lyn Alden from Lyn Alden Investment Strategies. She's well, I'll let her introduce herself, but she's obviously like a very prominent macro voice and has gained a very loyal and deep following in the Bitcoin world. And we're here to talk about Bitcoin's tie-in with the energy markets, which is obviously really topical and important. So, Lyn, welcome. Thank you for joining us.
Thanks for having me. Happy to be here.
Yeah, no, it's a pleasure's all ours. So I don't know, Lyn, maybe like I'm sure many people who are listening know you, but maybe like introduce yourself, talk about your background, like how you found your way to the macro and investing world, and then like secondarily to that, what led you to explore and get to know Bitcoin.
Sure. So for people that don't know me, my background is a blend of engineering and finance. And so I actually, the first decade of my work was focused on electrical engineering. And so I started out as a design engineer and then shifted more to the engineering management and engineering finances side of the business. But I've always had a lifelong interest in investing in money, equities, precious metals, things like that. And it was always something that I pursued and researched on the side. And it's pretty common in the industry because anyone with a quantitative background can kind of shift into other types of quantitative roles. And so I generally found that engineering kind of mindset applies well to just trying to diagnose some of the issues in markets and try to, provide these long form objective write-ups about some of the issues that are happening either in the macro economy or in, say, energy commodity markets or towards digital assets, Bitcoin, things like that. So I try to pick areas that I have some degree of where my background's helpful in. So for example, I don't really talk about, unique healthcare stocks, for example, because I have absolutely zero edge there. And instead, I tend to focus on what's happening with money, what's happening with energy, and kind of the intersections around those areas.
Sure. So maybe like what just for a little fun, what specifically about I guess the network or the technology behind Bitcoin really was like the lure or like the hook that really got you initially? What there had to be something that like must have really resonated as an engineer to kind of lure you in.
I think the automated nature of it, how decentralized and basically just like a really like a well-oiled clock, basically. And like a lot of people, I had to have multiple kind of interactions with Bitcoin before I appreciated the innovation that had happened here. And so, I first heard about it back in like 2010. I had a friend that could mine it on her computer with a high-end graphics card. And a lot of people, they dismiss it, whereas I actually never dismissed Bitcoin. Every time I heard of it, I was like, okay, that's neat. That sounds like it's pretty cool. It's like this kind of weird self-referential automated process. And I always thought, maybe I should mine it. Maybe I could do that. And I just kind of didn't get around to it. And of course, then you can't do it anymore. And then, I would see it again, and it's like, $600, and it's making news. And at that point, a lot of libertarians were on board with it. So it was like this, kind of libertarian money. And I was like, cool, like, good luck for them. My concern was that, I was like, can't you just copy this? And can't, why, how do you know there's not going to be a better one? And so I was always kind of like not super optimistic about ever becoming a large thing. Like I didn't really have a strong opinion that it wouldn't, but it just kind of wasn't asserting itself on my radar until I kind of kept seeing it pop up. And I think for what really kind of finalized it for me was seeing the resolution of the block size war, which really put the decentralization and immutability of the protocol to the test. And I think it passed that test pretty well. And it kind of showed some of the market dynamics around who has the power in the network. And so that degree of credible decentralization and immutability combined with network effect analysis made me start taking the network a lot more seriously, especially because a lot of my research is kind of looking at how financial markets are kind of broken in many ways. And so I just kind of view this as like the next step of technology to fix some of the issues that we have with money.
Yeah, no, that's great. It's really interesting. I think many people out there who look at alternatives to Bitcoin as a solution would agree with you that there are many things that are broken. And And in some ways, we're kind of seeing that right now, right? Like we're at Hedgeye, we're about as bearish as you can be out there on the street right now, and we're calling for what we label as a quad four, where the rate of change is decelerating on growth and inflation, and it's a really odd solution that that the Fed and other central banks are delivering to the here and now. It's like you're attacking the demand side of what's really a supply problem, or in many ways. So it's an odd solution, but maybe now that we got your background and kind of like what brought you in, the, I've spoken about it, and my colleague Josh Schneider has spoken about it a lot, about Bitcoin's connection to energy and how important the energy markets are, to not just the value of the token, but also the network itself and how it functions. But I think that, like, for better or for worse, especially when you step outside of the digital asset community and you really talk to dedicated finance folks, they see nothing more than a token. So I'd love to like dig in on its energy's importance, how it's related, like what foundation does it form. So maybe speak to that broadly, like how you kind of think about it.
So I would say that what Satoshi invented was he basically recreated, commodity money, but in digital form. And so, if we go back long enough, back when people used gold or other commodities as money, that proof of work, that energy input is really what made it rare, right? So in order to get gold out of the ground and in a form we can use, you have to go through tons and tons and tons of rock. First, you have to find it. You have to find a deposit. Then you have to all that development, all that effort. And when you have a gold coin or a gold bar that you can verify, that's essentially proof of work. It was proof that a lot of work was done to make this in this pure form here, and it's not something that anyone can just go and just create more of. It's very, very hard to do so unless you find like a new continent that's just got all these untapped resources and things like that, which happens obviously very rarely. And so you have this very low inflation rate of gold, and it takes work to get each ounce out of the ground. And obviously over time we shifted more towards fiat currency, where money creation has no cost. It's basically it's got kind of artificial scarcity attached to it, because there's various rules for how money can be created between the banking system and then certain actions from the government and the central bank. And there's kind of that kind of fragile but kind of well-oiled ecosystem there, kind of keeping the wheels on track, in some countries better than others. Obviously, there's a pretty bad track record as you go out more and more towards periphery countries. And what Bitcoin does is basically reasserts money that requires an energy input that is hard to make more of. And that basically when it exists, you can verify using that proof of work that it is what it is. But then more importantly, it's also in addition to creating new coins, the proof of work also goes into verifying transactions and basically adding new transactions on the blockchain, and represents the basically defense against double spending on the network or trying to censor the network. And so the more energy that goes into the network, the harder it would be, or the more cost it would be for some sort of entity that doesn't want Bitcoin to do well or wants to steal from recent transactions to go in and either censor it or do a double spend and reverse a lot of the recent transactions. And so one way I describe it is that what Bitcoin basically is a decentralized transfer agent and registrar. So, for example, if you have a company and its shares trade hands, right? So the company uses a transfer agent to keep track of these shares moving around and who owns it. And of course, that external entity is different from the company themselves, but it's a centralized entity. And what Bitcoin essentially does is uses energy in the input to keep track of this ongoing global decentralized ledger that we have. And so basically it uses energy to minimize, almost eliminate governance. Basically there's still some degree of governance about node operation and mining operation, but because you've automated it so much and you've used energy as kind of the arbiter of truth, it's basically about as a governance minimized system as we can conceive of.
Yeah, no, that's all great. And maybe like just a quick aside for anyone who's watching who may not know this term proof of work and how important it is. Maybe let's dig without getting too technical. Let's dig into exactly what that means and what function it serves, because I think that you'll appreciate this. One of the things that happens, especially for institutional investors that are new to the space, they kind of look at all of these digital assets as the same. And the reality is the underlying architecture is not the same. So maybe talk about that a little bit, because I think it's an important foundation.
So basically blockchain 101 is, you add a new block. It's basically a ledger that anyone running a node has. So the ledger doesn't exist on some specific cloud. It exists on tens of thousands of computers around the world, which is what makes it, very hard to eliminate. And every time a new block is added to the blockchain, that adds a bunch of thousands of new verified transactions. So if I want to send Bitcoin to you, we have to make sure that gets in a block, either the next block or some future block. And what each block does is it leaves behind a puzzle that the next block has to solve in order to attach onto the blockchain. And basically the way that that's solved is by guessing over and over again. And your ability to guess is relying on processing power, which is relying on electricity. And so it sounds wasteful at first, but that process is what decentralizes it and what makes it, very, very hard to corrupt. That there's no central authority that it can decide, what blocks are going to be added, who gets to add them, who gets in there. It's this very, democratized system where anyone who's sending transactions is offering fees in order to get into the next block. Miners around the world are keeping track of that queue, and they're trying to find the next block. And then when a miner does, they go ahead and put the high fee transactions into the next block and put that on the blockchain, and then that starts the process all over again. And the reason it's called proof of work is because basically when you go back and look at the blockchain, which is over 750,000 blocks by this point, over 13 years of operation, you basically have this proof of each one shows how much kind of processing power went into it to get that block. And so if you were to recreate a longer blockchain, it would take years of running processes in order to have that longer blockchain. Whereas if you use a proof of stake system, which they might be useful for other purposes, but they're less kind of resistant to critical errors or self-correcting, because basically they're relying on circular logic. It'd be like if a company was serving as its own transfer agent or registrar, where the shareholders decide who the shareholders are, essentially. And so in that type of system, you eliminate the energy component, but then you put in more of a governance component. And so there's different models, but what makes proof of work interesting is that it's self-verifiable. So with proof of stake, it's costless to create an infinite number of copies. And then the question becomes, what is the real ledger? What is, the official canon ledger? And so it kind of comes down to a, majority decision, more or less. Whereas in Bitcoin and proof of any sort of proof of work blockchain, the longest chain that follows the rules is the canon chain, and it's self-verifiable. So no matter who gives you that blockchain, your node can verify that, yes, this is the longest blockchain I'm seeing. It follows the rules, and therefore it's the one I'm going to use unless I find a longer chain out there. And so it basically it's the best we have, the best we know how to make a decentralized ledger.
Yeah, and maybe like borrowing up the comparison that the example you just drew, in my opinion, and I'm sure there are people who disagree with this, proof of stake does not reintroduce that cost of production that you talked about earlier, right? Like it's not, it's kind of like what Parker Lewis said, right? Like if there's no cost of production for a monetary good, not necessarily the price, but the value of that monetary good will trend towards zero in real terms. I think that's what you're talking about. It could be like to some extent, right? Like in some way.
I think that's basically the way to describe it.
Yeah.
But I think that the most challenging issue with proof of stake is one that it's basically circular logic. And because it's circular logic, the complexities involved in making it work, like if the code base is like 100 times more complex than proof of work, because you're trying to solve for the fact that it kind of inherently doesn't make sense, but you can, with enough smart programming, you can make it make sense. But then the question becomes a matter of community governance. So it ends up being kind of like fiat currency, where it's very reliant on the ecosystem participants having these kind of rules that they follow, and then, not corrupting that over the long arc of time, which we know is very hard to avoid have happening.
Yeah, and maybe this is an interesting one too, right? So like one thing that you're speaking to it right now. There are trade-offs everywhere in the digital asset space, and with, I guess in this case, with effectively energy tokens, right? Like you have a proof of energy expended token digitally in the form of Bitcoin, and then you have a physical energy token in the form of gold. And I guess what's interesting for folks and what's this ongoing debate is like what are the trade-offs between the two, right? So that's really interesting now, and I think it also may kind of lead into the next part of the conversation where we talk about what's going on in energy markets and what it may mean for the Bitcoin network, not necessarily the token, but the ongoing functioning of the network. So I don't know, like we'll talk about the trade-offs, like how do they relate or talk past each other, or the advantages and disadvantages of each.
Yeah, so we, obviously gold has the much longer track record. And it works, even if the internet goes down, I mean, you can still use gold and silver to transact. And it's basically gold is the highest stock to flow ratio commodity, meaning that the supply inflation rate per year compared to the existing estimated stock that exists is very low, something like 1.5% per year on average of supply growth. So if you imagine a money that had a 1.5% supply inflation rate, broad money supply growth over the long term, that'd be a pretty attractive money compared to most other currencies. The dollar grows, it's on average something like 7% per year. Most emerging market currencies grow much faster than that, whereas gold is basically this very slow supply growth currency. And it's something that there's no central authority that can just print more of it, and so that's why it's had this very long track record of holding its value. Plus, it's nearly indestructible in the chemical sense. The shortcomings are basically its portability and speed, right? So you can't use gold to transact with someone in another country unless you abstract it in some way. It's basically only suitable for local commerce, and as once we put undersea telecommunications cables in the late 1800s, we've been able to transact globally, much faster than we can move around gold. And so we had to abstract gold more than it already was at that point in order to basically keep up. And then it was able to be dropped away from the money system, other than as kind of these opaque sovereign reserves. And whereas Bitcoin, there's multiple advantages. One, it's basically it's as scarce as gold, but then it moves as fast as fiat. You can settle a multi-billion-dollar transaction in an hour. Basically it depends on how much confirmations you want to wait for. But basically it's a very quick network at coming to a final settlement for all practical purposes. And then with things like Lightning, you can do these instantaneous payments on top of it. And so it's basically this very efficient system that in some ways combines the strengths of both fiat and gold, with the downside being that because it's open source, anyone can copy it. And so kind of like how gold is sometimes under threat from, say, paper claims on gold, people that think they own gold, but that, if kind of the music were to stop, not all those claims are maybe tied to an ounce of gold. You kind of see the same thing in Bitcoin, in the sense that, you can have literally tens of thousands of altcoins come around, and then that can dilute market share and market and network value if that kind of persists for a long period of time. And so basically it has to fight for market share among thousands of other alternatives. And so that's, I think, a very long process. And of course, it's only a 13-year-old asset. There's always risks of bugs. There have been some bugs in the past. One thing I like to point out is that Bitcoin, it's had 100% uptime since 2013, which not even Fedwire has. And so it's a shockingly robust system, but it's not without tail risks and bugs that could disrupt it. And so I think that in many ways Bitcoin is an improvement on gold, but it's not superior at every possible variable. There's still kind of a role for gold as well.
Do you agree with the idea that as opposed to gold, which kind of absorbs all of the input cost it takes to produce it, and then it's just like physically there to custody or exchange or transact with it how you will, but that a fundamental weakness of Bitcoin, because I've heard this, that a fundamental weakness is that there's this ongoing almost energy liability to have it function, as opposed to like an upfront cost, there's an ongoing cost as well. Do you agree with that position, or do you have a different view?
So I think it's a reasonable position at first, but I actually mostly disagree with it because when when you look at gold, so an individual gold coin doesn't have any more energy cost. However, any sort of like transactions or using gold in any sort of economic sense does have an ongoing cost because it takes time and energy, various types of
Mm-hmm.
resources to move it around.
A
Just
military,
yeah,
guys with guns.
yeah,
Yeah,
you need
yeah,
but yeah. I mean, when Germany wanted to repatriate its gold, this ended up being a multi-year process because obviously it could have been done faster than that, but it's basically a complex process to move a lot of gold a far distance and then to verify it all. When China buys gold from Switzerland, if they buy like the old type of gold bars, they want to remelt them down into a new type of gold bar, partly because that's one of the only ways you can fully verify that down to its core, it is exactly what you think it is. And so the ongoing cost of storage, transportation, and repeatedly verifying that it is indeed gold does have an ongoing cost. And so there is some truth to the fact that if you have, say, gold in your house, that is, that's there for as long as you want it to. It is what it is. But the actual, quote unquote gold network does have an ongoing energy cost.
yeah, yeah. That's fair. I think I agree with that. It's just interesting. Like sometimes you'll typically hear that out of the gold only community that there's this. It's an inherent weakness that there's an ongoing, but really what it is, it's uptime on the internet, right? Like that's ultimately what the potential liability is. I guess so. Just kind of thinking about that. I mean, obviously, right now we're seeing some. As an engineer, like you must. I'm in amazement as a strictly financial guy with like a dumb real estate brain. Like, as an engineer, you must just be in awe of what's going on, or I imagine you would be in the energy markets in some parts of the world right now. So, I guess like how does something like a 6x or 7x in the price of gas in Europe or just in general, maybe underinvestment in energy infrastructure impact or influence how, in your view, like how Bitcoin could evolve over time? What's your position on that or your view on that?
Well, so I think what we're seeing in Europe is it's a combination of problems. Obviously, there's
Mm-hmm.
underinvestment, and then you can get away with certain shortcomings if certain risks don't occur. Whereas in this case, it did occur. You had Russia's causing problems, and then also you have record droughts in that region. So you have like a
Mm-hmm.
1-2 punch that's really kind of hitting them in all of the vulnerable parts around their energy grid. And for something like that, there's not a whole lot that Bitcoin can fix.
Mm-hmm.
But what I find interesting about, the relationship between Bitcoin and energy is that, people when we talk about a resource cost for Bitcoin using energy, the kind of the first assumption is that's all bad. Basically, it's any
Yeah.
sort of energy expenditure is a bad thing. Whereas we actually find that because of the unique way that Bitcoin consumes energy, it actually can be used to solve some energy problems. It's still a pretty small scale because the total energy expenditures, several $billions, but it's not like, hundreds of billions of dollars or anything like that, per year. So it's still pretty small, but it can be used to kind of fix certain little issues. And one thing I like to point out, because a lot of people that don't have a background in electricity in various ways don't know, is how non-fungible a lot of our energy is,
Mm-hmm.
right? And so they think that if you produce electricity and you use it to mine Bitcoin, that you could have used it for something else. Where actually in many cases there's no other source of demand in that
It's wasted,
time.
right?
It's
Yeah.
wasted, right? And
Yep.
so we actually waste a profound amount of energy, both on grid and off grid.
Mm-hmm.
And there's really no way around it. These are just frictions of doing business. And so, for example, if you bring oil out of the ground and it's a small isolated well and it comes with some natural gas, the question becomes, what do you do with that natural gas? If it's not enough to have a pipeline built to you, and it's not enough to, kind of collect it all and get it out there, a lot of times they'll just burn it. They'll literally just either vent it into the atmosphere or they're just light energy, perfectly good energy on fire.
Yeah.
And so what Bitcoin can do is Bitcoin, because it's unique in the sense that, you know, even though the network has to be online all the time, any individual miner can shut off and the
Mm-hmm.
network is fine. And so they can just go on and off very quickly. And they don't, unlike a data center, they don't need high bandwidth. So they don't need high uptime and they don't need high bandwidth. So they have this unique ability to go out to these remote locations and just suck up stranded energy. So it's like you can go to an oil well and say, hey, instead of just burning that natural gas away, how about we just use it to power this electric motor and then mine some Bitcoin with it. So either way, we're going to use it, but let's actually use it economically.
And it also, it was fascinating. Like I spent some time down in Texas and West Texas and meeting with Riot. Those guys out at the wellhead, I mean, it's like an entirely new customer to them that's shortening their payback period. Like it's making it more economical to go out and drill a new well, whereas, previously you had to obviously there's a lot of infrastructure investment behind that. You may not have a supportive regulatory environment. There's so many things going on that Bitcoin kind of like addresses on the margin that makes it more lucrative to actually go out and produce. It's fascinating. I don't know if you've probably seen it too. It's really exciting.
Yeah, it's actually kind of remarkable how many different areas this applies to, because that's one of the most obvious examples. But there's multiple other ones too. For example, the reason that so much mining happened in China until they kind of cracked down on it was that they had all this extra hydro capacity, right? So they built all this hydro that was away from the cities, and not all of that was being used. And so during the wet season, Bitcoin miners would go over to that region and basically get all this nearly free energy because it's really otherwise just curtailed. It's not actually being used for anything, and so it's super cheap for them to access. And we also see it. Use Texas as an example. They have a pretty high allocation of renewable energy. Or variable energy, solar and wind, and because they have that closed grid system, that can be pretty challenging. And so one thing that you kind of see occurring is both in Texas and that whole region is the occurrence of negative electricity prices, which at first sounds like a good thing, but then you realize basically what that's signaling is that energy is being produced and there's no one in that time and place that can use that energy productively, and so you have to try to pay someone to take it off your hands, or you just curtail it. And so basically having a variable source of electricity consumption actually can help stabilize the grid and can make some of those variable production sources more economic on the margins. It basically affect how that relates to grid stability.
Yeah, and I'm going to do a really poor job of describing this, but because I'm not an engineer, but maybe you could you could definitely say more eloquently than I could. But aside from production at the generation source, my understanding is that at any given point in time, you actually have to supply more electricity almost as a buffer to the grid to offer up essentially, some amount of energy to meet an unexpected increase in demand. But if that unexpected increase in demand doesn't come, effectively that energy just gets wasted. It goes to the end of the high voltage transmission lines and is never used. And so in a way, the Bitcoin mining industry can absorb that almost useless supply at any given point in time. But then when the demand levels fluctuate up, they can power down and basically send that. Right? Am I describing that the right way? Is that the right way to think about it?
Yeah, essentially any grid needs overbuilding, right? Because if you were supplying exactly as much power as expected to be needed, then turning on the marginal laptop causes brownouts. And even worse, you have to design the grid for the hottest day of the year, so that when every single household and company has their air conditioning out full blast, that the grid can handle that, even though 360 days out of the year it doesn't have to do anywhere near that, right? And so that's actually a pretty hard engineering problem to solve, because it costs a lot of money to over-engineer the grid for times when it's mostly not even going to be used. And the way that Bitcoin miners can fit into that is that they can do contracts where, because they're the most flexible energy consumer, they can basically negotiate such that they get the lowest possible rate, but then they're the first to have to shut off if for some reason demand is starting to exceed supply, right? So if you have that hottest day of the year and you're trying to find out ways you can shut off electricity that won't bother anyone, Bitcoin miners can basically sign up to say, okay, roughly 5% of the time will be shut off when you have a
Hmm.
problem in exchange for having the lowest rate the rest of the time, which is,
Yep.
kind of the exact opposite of what you'd want to design for if you were like a hospital, where basically you're saying we'll pay whatever we need to, but we're like the last that would ever be shut off, right? And
Yep.
so Bitcoin miners on the total other end of the spectrum, and that can actually be useful for grid stability, especially because we don't have the technology yet to cost effectively build grid level large scale electricity storage, right? we
Yep.
can we can do it for obviously areas, but it's not something we can just have everywhere abundantly. And so another way to do it is to have more flexible demand sources.
Yeah, and if I'm not mistaken, at least the large industrial scale miners, they'll actually negotiate to get paid for that curtailment, right? So like when they power down, they're still getting compensated by the utility to do so, I believe. I'm not sure, but
Yeah, there's all sorts of different arrangements out there. And basically the
yeah.
key way to think about it is that because of the most flexible consumers electricity,
Hmm.
they can basically negotiate such that they make use of their flexibility in order to basically get a better deal than they otherwise would. And that can then by extension help the rest of the grid. We also see but there's also like other off-grid ways to kind of that Bitcoin can be useful. So in addition to that oil and gas issue, there's also things like methane coming out from landfills, right? So
Oh yeah,
there's
let's talk about that. That's a really exciting. There's the name of the company escapes me. They were just on Peter McCormick's podcast.
there's a couple doing it. One is Vespine, but yeah, there's a handful of
Vespine.
entities. Yeah.
Yeah, talk about that. That's really exciting stuff because I think that like one thing that people don't think about is like how big of a source of greenhouse gas pollution those landfills are. They're just sitting there, right? And like no one kind of thinks about them. So I don't need to talk about it. It's really exciting stuff, I think.
Yeah, so methane is a more potent greenhouse gas than carbon dioxide. And that's also why, going back to oil and gas for a second, when they have that spare natural gas, the worst thing they can do is just vent it into the
Hmm.
atmosphere, because basically what they're doing is they're putting methane into the atmosphere. So when they burn it into carbon dioxide, what they're doing is they're making it a less potent greenhouse gas. And then actually running it through an electrical motor to power Bitcoin miners, is more efficient at clearing out the methane. Basically, it makes it even less methane get into the atmosphere. And
Hmm.
so when you go back to landfills, they emit methane, and that's an energy source. And there are different ways to make use of it. I mean, if you have a ton of it, you can use that. You can collect it, and you can technically even put it back on the grid. There's different things you can do. But if you have small sites or sites where that's not economic to do, a lot of that methane just keeps escaping into the atmosphere. And so Bitcoin, again, because it's, these miners are remote, they can pretty much go anywhere. They can make use of these weird little situations. They can be used to say, hey, well, let's capture that methane and mine Bitcoin with it, and basically have, maybe it breaks even, maybe it's profitable, but basically either way, it's a good thing to be happening. And another example that's kind of along those lines is a company called PRTI. And what they do is they collect stranded tires. The world throws away like a billion
Hmm.
tires a year,
Hmm.
and it's a shame because there's actually useful commodities in those tires. A lot of time they either bury them or they light them on fire, which is awful. Um, and like literally like a billion a year. And what this company can do, and they've already been doing it, is that they have these boilers, and they'll take waste tires, they'll
Hmm.
boil them down to their constituent different commodities, basically different types of hydrocarbons. And part of in the process, they also generate some natural gas, and they can use that to create electricity. The problem is that, these sites where they're doing it are usually not near population centers. There's usually
Hmm.
not a lot of demand for electricity in that area. So they're offered very, very low rates, if anything, by the grid in order to sell that electricity back to them. And so, and because this is a challenging process, it's not very economical. But one thing they can do is use that electricity on site to mine Bitcoin, and that ends up being what closes the loop to make this like a sustainable kind of business practice, right? So it's one of those things where people have good ideas, but if you don't have the actual incentives in place to make it work properly,
Hmm.
it's very hard for that idea to spread. And so basically that kind of remote nature of Bitcoin being able to make use of marginal energy can kind of be like the missing puzzle piece that kind of fixes some of these issues.
Yeah, and actually, I thought of something. I've seen you talk I've spoken to like the grid guys, grid infrastructure. I've seen you talk quite a bit about nuclear, and I know you're, I don't want to say that you're a fan of it, but I know you or I've seen you speak to it as like being an important part of the energy mix going forward. And I'm actually fascinated about how the ways, or like, and I know some Hedgeye subscribers are as well, the ways that Bitcoin mining can incentivize nuclear development. Because my understanding is, and again, this is coming from not an engineer, but nuclear, once it's operational, once a plant's operational, it's actually fairly cheap to run with like a very like extremely high uptime. But one of the challenges is the upfront investment and kind of like the payback period. So I don't know, maybe talk about that a little bit, or how like mining could kind of fit in there, because that's the way I understand it, but I could be wrong about that.
Yeah, so the way I would phrase it is kind of like how Bitcoin can help with variable sources of power. It can also help with always on sources of power. And so when we look at how a grid works, there's some sources that they're kind of fluctuating based on the weather, right? So sun and wind. Then you have like coal plants or natural gas plants that we have fine control over. We can turn them on, we can turn them off. It's a shame to have, it's kind of like a lot of times they're built only to be used, kind of a small percentage of the time, which is somewhat wasteful, but it's important so we don't have blackouts and brownouts. And then the third type is, sources of power that are almost always on. And so those would include like, hydroelectric dams, as long as you don't have like a severe drought, basically it's always on. And same with nuclear. Basically, it's once you're started, it's almost always providing power. And the challenge there is that if you have always on supply that doesn't change much, and you have fluctuating demand, you have a challenge. You either need to not build too much of that fixed supply, and you have to have some of those, like say natural gas plants, to provide that marginal extra supply when you need it, or you need to overbuild, and then you're just wasting some of the energy you're producing, which is both harms the economics of the project and it's wasteful. And so one thing that Bitcoin miners can do is they can co-locate with always on sources of power and soak up the power when it's not being used. Basically the kind of the fluctuating, if you have like fixed supply that's overbuilt and you have fluctuating demand, they can kind of eat that difference. And of course, if you have those rare days where demand goes all up to supply, those can completely shut off. And so it's another way of stabilizing and economically incentivizing a project. I think if anything, a funny thing is that Bitcoin mining is not big enough. It doesn't use enough energy to solve all these issues. That's why I don't really get concerned about Bitcoin's energy usage, because the more this network is around and understood, the more it will be increasingly co-located and basically merged with the energy system, so that it's for the most part only it's using the types of energy that make sense.
Well, you read my mind, because we've all encountered it, whether it be a mainstream narrative or whatever it is. When you talk about Bitcoin now, like one of the first areas of pushback, or at least questioning you get, is on the use side and how environmentally unfriendly it is. And I don't know, like, so you just hit on it, but like, how much energy does it use, and is it really that significant? Like, there's narrative, there are like, crazy examples where Bitcoin uses as much energy as like a small country. Like, some of this is kind of nonsensical, and maybe some of it might be true too. So where do you shake out on it? What's your position?
Yeah, so the thing is, true things like facts can be kind of explained to make them look big or small, depending on how good you are with words. And so basically quantitatively, it uses over 100 terawatt hours a year. It's a pretty substantial amount of energy. It's something like 0.1% of global energy production. So it's a rounding error as far as global energy is concerned. So it's a lot, but it's a little in that sense. It is true that it uses more than small countries, but it's also true that any large industry uses more energy than small countries. So for example, tumble dryers in the United States collectively use more energy than some small countries. Yeah, Christmas lights use more energy than some small countries. Zinc mining uses more energy than some small countries. Aluminum refining uses way more energy than Bitcoin and more than some medium-sized countries. So, basically it's one of those things where it uses an amount of energy that is significant, which is also why so far the network's been very secure. The cost to, acquire half of that mining hash rate and then attack the network either by censoring it or by reversing transactions is very, very hard to do because of that high hurdle to attack. It would take billions of dollars in order to build up the infrastructure in order to try to attack Bitcoin through the mining method. But it's not a lot in the grand scheme of things. And that's also true for e-waste. Another thing that comes up is e-waste. And so basically we're still at a stage where it's hard for us to properly recycle electronics, and that can include Bitcoin mining equipment. So another one of the criticisms is the e-waste. But it's one of those things where I think e-waste actually is a pretty significant problem, but Bitcoin's kind of addition to that problem is again like 0.1%, right? Or somewhere in that ballpark. And so it's one of those things where you want to be as efficient and environmentally friendly as possible, but it kind of gets singled out disproportionately and I think attacked for more ideological reasons than actually fact-based reasons. And then going back to the prior point, even that 0.1% of global energy it uses is mostly stranded energy, right? So it uses higher rates of renewables than most other industries, and that's because renewables tend to be, unfortunately, they tend to more likely be stranded because of their variable nature or their always on nature. And so a lot of Bitcoin mining uses hydro. A lot of it, soaks up these areas that have, a lot of wind and solar. It makes use of nuclear power, and so it's a pretty efficient system overall. And I kind of view it as like a rounding error. Now you can always especially in the past when it was like less efficient and there was kind of less co-integration with the grid, you can have individual cases where Bitcoin miners come into town and stress the grid and things like that. But as long as it's done intelligently, that's kind of a self-correcting thing because if they go, the reason there's not that many Bitcoin miners in like Europe, right, that we're seeing right now, or we don't see you don't set up a Bitcoin mining operation in New York City, is because it's the economics of it inherently, they push you towards wherever energy is stranded, right? So basically Bitcoin, because it's so commoditized and it's so efficient and it's so hard to be profitable, it can't really just compete. It can't like go and compete with electricity that's actually being used for other purposes. It has to go and kind of pick off these low-hanging fruit of electricity that's not being used well.
Yeah, no, that's a great point. And by the way, I'm going to plug you a little bit, Lyn, because I think I may have DM'd you once and said you have way more patience than I do. But for anyone who's interested in like looking at this topic, Lyn had a really great debate with a guy called Digiconomist on Twitter about the very issue of e-waste and like excessive energy usage and stuff. And Lyn did a great job. So anyone who's interested, I definitely recommend watching that debate. It's very informative. But tip my cap to you, because I don't think I would have been able to be that patient.
I appreciate that.
Yeah, no, it was great. And I don't know, maybe like just taking it full circle, it really comes down to that whole question as to the amount of energy used. It really comes down to whether or not maybe we judge it as a useful use, an important use of that energy. And without leading you too much, like I kind of shake out on if you assume or if you come to the conclusion that like securing a credibly enforceable decentralized ledger is important, then we will use it. If not, then we will not. So like that's kind of the give. I don't know. Do you agree with that, or like what's your take on that?
I do. I consider that a decentralized ledger, a kind of a global platform for sending and storing value that currently no one can control unless they can try to get half the hash rate, is valuable. And the way I'd phrased it before is that if all of Bitcoin just burned coal, right? If none of what I said was true and it just all of the energy was just like wasteful coal burning, I still think that's worth 0.1% of global energy, right? And it just so happens that it also due to the flexible nature with which it used electricity, fortunately, that's not the case. Fortunately, it can go and find all these stranded things. So, and those of us in the West are, a lot of the criticisms about Bitcoin being useless come from people of privilege. They're like, well,
Hmm.
we have working bank systems. Why do you need Bitcoin? And we actually see, if you look globally, chain analysis, they're the ones that do like,
Yep.
research for law enforcement and companies about who's using the chain and how, things like that. They find that, they have a crypto adoption index, and, the top 20 countries in terms of adoption, and they have various ways of measuring adoption. 19 of them are developing, they're classified as developing countries, emerging markets or frontier markets. And the only one exception is the United States, because
Hmm.
I guess we're kind of weird. But it's you don't have to basically hard sell an Argentinian on why something like Bitcoin is useful, or even things like stable coins, right? If they can
Yeah.
access dollars outside of their banking system, many of them would be happy with that. And you don't have to hard sell it to someone in Turkey. You don't have to hard sell it to someone in Nigeria.
Or
It's
Ukraine right now,
or
right?
Ukraine. Yeah, it's
Yeah.
self-evident for a lot of people. And another example is the Human Rights Foundation. They have their Oslo Freedom Forum every year, and they have like a segment on Bitcoin, because kind of like how VPNs are a way that human rights activists and things like that can navigate hostile internet situations. Bitcoin is a way for them to navigate hostile financial situations, where if you're a lot of countries, if you're a protester, right? So in Nigeria, for example, there are people
Canada.
yeah, Canada. I mean,
Yeah.
Canada, yeah, but even, I like to pick off more extreme ones like
Sure.
Nigeria, where they're protesting against extreme police violence and corruption, and they get their bank accounts frozen. And that's kind of a way of trying to slow those protests down. So then they turn to Bitcoin, and then they go and share their story, for example, at the Oslo Freedom Forum, explaining how they did that. And so things like Bitcoin and stable coins have those purposes, because it basically gives people access to a type of money, either Bitcoin or dollars in this case, in a way that is outside of their local banking system. And so
Yeah.
I think it's something that is, it, considering half the world lives in authoritarianism or high inflation. I mean, right now we're kind of all living in high inflation, but even in healthy times, there's a lot of people in other countries living in pretty severe inflation, and so these types of technologies are in some cases life changing for them.
Yep. Okay, Lyn, so we've been going for about 45, 50 minutes now. We have some questions from the audience. I would love to make it a little interactive, and obviously like people are chomping at the bit to pick your brain a little bit. So
Happy to.
so maybe like a couple of these, and I'll just read them off, take them one at a time. But this one's from Danielle, Daniel from Connecticut. Lyn, Rob, thank you for your time. Great insights. I mean, really, Lyn's great insights, not mine. Are either of you concerned about governments or central banks, et cetera, joining forces and doing what they can to stymie Bitcoin?
So I do think it's a risk. I mean, we see that. I mean, I use Nigeria as an example. They have shut off their banking system from going to crypto exchanges, right? So, they haven't outright, made it illegal to own, because that's very hard to enforce. It's just open source code. But it is pretty easy for a country to say, okay, none of the banks can send money to crypto exchanges, and that doesn't stop the flood. So, for example, Nigeria is still one of the highest countries in the world in terms of Bitcoin and crypto adoption, despite that, because they do it peer to peer. Basically, life finds a way.
Yeah.
And so obviously, ironically, if they ban it, it's almost a sign that you need it. Whereas if it's not a problem, there's no reason to ban it. But I do think, we're seeing there's kind of around the margins, we see attacks on the idea of self-custody from some politicians. We also see attacks on the energy usage. That's a common kind of attack vector. And then we also see with the Tornado Cash sanctioning on Ethereum, that regulators don't really like the idea of privacy.
Yeah.
That's been true in the bank system for a while. And so if there are ways to be cryptographically private with your transactions, that's not something that most governments are thrilled about, even though that could be a good thing or a bad thing depending on what the purpose is. Obviously, you don't want a terrorist, getting away with certain things. But in a lot of countries, the government is not necessarily a good actor, and so human rights activists kind of want that privacy. And also, it's privacy from corporations, right? So, for example, if you withdraw your Ethereum from Coinbase, and they can now track everything you do with it, unless you put it through some sort of like mixer, which is now
It's a little
sanctioned.
scary.
Yeah, basically, I do think that there are risks still around regulation, going after mining, going after privacy, going after self-hosting, maybe taxing it to death. There are definitely a bunch of ways to kind of slow it down or increase the risk kind of around it.
Yep. Okay, so we actually, we have a couple of, one more, and then there's actually a couple of Ethereum questions. And Lyn, for people watching, it has done a lot of. I don't want to speak for Lyn. I know she focuses on Bitcoin, but she's also very informed on Ethereum as well, and has put out some great work, kind of analyzing it. But before we go to those, from Michael, what happens when the cheapest electricity still costs more to mine one Bitcoin than the price of one Bitcoin? Or maybe that's a hypothetical.
Yeah, so what happens is there's a difficulty adjustment. So every 2 weeks, the network changes the difficulty, and there's no human deciding this. It's the network kind of calculating on its own. It basically looks at the speed of blocks. So blocks are supposed to come out on average every 10 minutes. And if they're not coming out fast enough, it basically means that there's not enough miners compared to the current level of difficulty. And so the network will reduce the difficulty of the puzzles that miners have to solve. And so they have to put less electricity in order to earn their Bitcoin. And so if you start to see that it becomes unprofitable to mine Bitcoin, the highest cost or the weakest miners start drifting off the network. We actually we've seen this recently. We also saw it during the China ban. And what happens is the network slows down a little bit until it has a network difficulty adjustment, and then it becomes self-correcting. And so basically that there's no situation where it can be persistently unprofitable to mine, because that difficulty adjustment can keep changing over time. And so it's no matter how expensive or cheap energy is, the Bitcoin network is kind of this adjusting, kind of it's a reflexive system.
It's like a self-regulator in a way. Yeah, it's fascinating.
And that's part of the you asked me before, what is it about that makes it kind of so fascinating, and it's things like that, how well designed it was from the beginning. And that's actually, Satoshi did not invent proof of work. That was, he cited Adam Back, and there are others that kind of did some early work on that too. And he didn't invent the idea of digital money. But like the difficulty adjustment, as far as I can tell, was Satoshi's thing. I mean, he put the pieces together from other people, and then the difficulty adjustment is actually kind of what makes the whole thing work. And it's kind of a remarkable insight that he had.
Yeah, it's incredible. It's kind of mind bending when you really like sit down and study it. Okay, so a couple more here. So now these are more Ethereum focused questions, but this is from Paul in Raleigh, North Carolina. With the ETH merge 2 weeks away, Lyn, do you have any concerns that politicians will cling on to the energy usage narrative and push regulation in favor of proof of stake over proof of work?
I do, and I think that there are people, not everyone, but there are people in the crypto industry that are pushing for that, right? So there would be people in Ethereum that would want to push for that. Ripple's well known for going after proof of work, and so I do think that that's an ongoing regulatory concern from the Bitcoin camp. Usually, when they want to kind of poke regulation, what they do is they focus on the fact that Bitcoin does not pass the Howey test. It's not a security, whereas a lot of these others, in many ways do pass the Howey test, and on some level probably are securities. Some more obviously than others, and so Bitcoin tends to kind of kick that hornet nest, whereas the proof of stake side tends to kick the energy nest on Bitcoin. And I think that's why discussions like this are important, because before regulators do things around Bitcoin mining, they should understand it. And I've been fortunate where I talked to Canadian financial regulators about it. They had it was actually kind of me and Digiconomist round two.
Really? There was a round two?
Yeah, there was a round two. It wasn't a public one because it was for regulators. And so I helped to educate them there. And then also I talked to some Norwegian parliament members. I was invited to kind of just talk about the energy component, because some of their far left groups tried to ban Bitcoin mining in Norway, and it didn't succeed. And so some of the people from the other parts of their government were interested in learning more about it.
So I'll put you on the spot really quick before the next question. Where do you shake out on whether or not these other tokens or securities outside of Bitcoin. And I guess maybe like Ethereum's kind of like teetering, right? But I don't know, where do you shake out on that?
So I think most of them that, the ones that raise capital, I
Mhm.
think most of them kind of fall into the securities camp. But then the question becomes, what do we do with that, right? I mean, does that
Yeah.
mean, in general, being a security is not bad. It just means that, if you're a reasonably centralized entity that raised capital with the goal of trying to increase the value of the, either the share price or the token price,
Mhm.
and you're selling those to the public, it generally comes to some degree of disclosures and kind of, statement of risk. So we're kind of in this somewhat regulatory gray zone where, like, people can create like a digital penny stock and then try to, sell it to people in scammy ways.
Yeah.
And so that's kind of a broader debate around regulation. That kind of goes in the whole thing is like, some of the best investments you have to be an accredited investor to access. And so the question is, who's that really helping, right? I mean, it's done to protect the public, but that also filters out people from the best investments, right? And
Yeah.
so I think there's a whole debate around to what extent anything should be regulated. But I do think a lot of those, not everyone, but I think a lot of those are either securities or very much like securities.
Yeah. Okay, so one more question, then we're gonna wrap it. So last one, and this is from Naj. Lyn, you had a tweet about how you think the strongest bull case for Ethereum in terms of the flippening is that it gets regulatory captured and centralized and could be fiat 2.0. Can you elaborate on this topic thesis more, and how likely slash unlikely is this?
So I think, if you talk to some of the Bitcoin bulls, they'll say there's like no chance that Ethereum can ever be larger than Bitcoin. Whereas I view it as a non-zero chance that, at least for a period of time, Ethereum becomes a larger system. It's not my base case, but it's something that I would not rule out. But then the question becomes, just because it's larger, that doesn't mean that it's solving the same problems that Bitcoin does, right? So the proof of stake element kind of, it requires more governance in the system to run than a proof of work system. And the risk there is that, basically with blockchain, there's a lot of design trade-offs, right? If you want to have it process more transactions or process transactions quicker, or if you want to have smart contracts on the base layer, all these things basically make it harder to run a node. And therefore the network ends up becoming more centralized. And there's other aspects too, like, basically because Ethereum has, smart contracts and decentralized exchanges and leverage and things like that, there's this kind of juicy market for front running trades. So, in Bitcoin, mining is pretty simple. You just kind of pick the high fee transactions and stick them into the next block. Whereas in Ethereum, there's actually ways where you can almost be like, you're like a market maker that can go and front run the people that are trying to get in the queue, and you can therefore get more revenue from that. And that's
Yeah.
a pretty centralizing force, because the entities that are sophisticated enough to construct those blocks are, not that many, right? And so it's actually, it's pretty hard to be involved there. We also see that, most, because proof of stake, you need 32 ETH to be a validator. So a lot of people, what they'll do is they'll deposit their Ethereum on Coinbase or
Mhm.
Kraken, or they'll use liquid staking like Lido. And so, a small number of entities end up controlling most of the staked coins, which means that, if they wanted to say if they wanted to block Tornado Cash at the entire network level, there's only a handful of entities they'd have to go after to do that on a proof of stake system, whereas it's harder to do on a proof of work system. So I think the risk there is that, in one way of looking at it, the current fiat system is essentially a proof of stake system.
Mhm.
And so, a proof of stake system that's in blockchain form can get pretty large, but then it risks getting captured and centralized and censored, and it kind of
Yeah.
defeats the purpose of why Satoshi kind of invented this whole thing in the first place, which is to at least try to create a system that can be free of being blocked in any way, which again is scary to people in some ways, because you think, well, that means criminals and terrorists can use it, right? But of course, the group of people in the world that want to use a system like that for good purposes and that need a system like that far outweighs the number of people that want to use it for nefarious purposes. It's kind of like the internet, right? So when people created the internet, it's like, well, this can enable bad things on the internet. Well, yeah, it does, but the 99% of it is good, or at least a lot of it is good, and the minority is people using it for bad purpose. And I think the same is kind of true for the idea of, unsensible transactions.
Yeah. Okay, so we've gone for an hour. Lyn, this is awesome. Thank you so much for your time. Where can people find you? Like, so where's the best source for your work to like dig into everything that you do? How can they find you on Twitter, et cetera?
So I'm at lynalden.com. That's where my main hub is. And I'm also on Twitter at Lyn Alden Contact. And thanks again for having me.
Oh, no, pleasure is all ours. Hopefully it'll be the first of several. So guys, everyone, thank you very much. Lyn Alden, here to talk about Bitcoin energy. So always happy to take questions offline, pass them on. And thanks a lot for joining us. So until next time.